Okay, so let's introduce the idea of using a balance sheet looking at the chartered banks. So with all balance sheets, we've got two components. We've got assets and liabilities and equity, and the key here is that the two must always equal. So let's go ahead and set up our bank. So let's suppose there's people get together and they put in $1 million in equity. So we're going to set up the bank with $1 million equity, and so what we have is equity then is $1 million. Now let's suppose that they buy some property and equipment for $750,000. So we'd have the property and equipment would show up as an asset of $750,000, and then the other $250,000 would be in cash, and it would be shown here. And so what we have is we've got our assets and our liabilities are equal at $1 million. Now let's suppose that the bank opens the doors and it takes deposits of $100,000. So that means that we would have our cash would go up by $100,000. Now the deposits actually show up as a liability, and this is because we've gone in and given them the money, so they're holding it on our behalf, and so we can come in at any time. So this shows up as a liability of $100,000. So we end up with a positive $100,000 on the liability equity side, and then a positive $100,000 on the asset side, so our assets equal our liabilities. Now suppose I go in and ask for a loan to buy a new car for $25,000, and they issue me this loan. So the loan actually appears as an asset. The reason it's an asset is because I agree to pay them $25,000 at some point in the future. So we get an asset, a loan issued on the asset side for $25,000. And then the first thing they do is they deposit that $25,000 into my checking account. So again, we've got a positive $25,000 in deposits on the liability side, and then the assets, we've got a new account called loans, and it's $25,000. And so we have assets equal our liabilities and equity. Now let's suppose I go buy the car, I write a check, and so the payment is cleared, so the payment's been made. So what they do now is they take that $25,000 out of my account, and so it shows up as a negative number in the deposits. Then on the asset side is that cash actually leaves this bank, and so it comes out of their vaults. And so we've got a negative number on the cash. So we've got negative $25,000 on the asset side, on the liabilities a negative $25,000, and so our assets and liabilities remain. So you can see how we can show various transactions using a balance sheet that a chartered bank may see.